Hello, my podcast friends. I'm Laura Adams, your host and personal finance author, speaker, and consumer advocate who's been producing this show since 2008. My mission is to give you the knowledge, resources, and motivation to manage your money the best way possible and create a richer life. Today's show is for everyone who has a credit card, a mortgage, or any type of loan. And it's also for those of you maybe who don't have those credit products right now, but you plan to get a credit account one day. Years ago, I wrote a really simple post in response to a listener question about credit card APR. The person just wanted to understand what APR is. And that article has been the most popular post on the Money Girl section over at quickanddirtytips.com for many years. So I thought I would turn the topic into a podcast and expand on it just a bit. So no matter if you've been using financial products with an APR for decades, or you're just starting out with your very first credit card or auto loan, understanding APR is critical for improving your financial life. So in this show, we're going to cover what every borrower should know about APR. You'll learn how it gets calculated, the different types, its significance in your financial life, and what's the best APR for you. As always, you'll find the notes for the show and the complete archive of podcasts in the Money Girl section at quickanddirtytips.com. This is episode number 628, called What is Credit Card APR? So let's get into it. First of all, APR stands for annual percentage rate. It is expressed as a percentage. Any credit account's APR shows how much you have to pay to borrow money. If you have a credit card with a 24% APR, that's the rate you're charged over a 12-month period, which comes out to 2% per month. And since the months vary in length, credit cards break down APR even further into a daily periodic rate, or DPR. That's the APR divided by 365 days in a year, which would come out to be 0.065% per day for a credit card with a 24% APR. The formula for your credit card bill uses this number. It takes the daily rate multiplied by your daily card balance, which is then multiplied by the number of days in the monthly billing cycle. It's really important to note that you're only charged APR on credit cards when you carry a balance from month to month. If you pay off your balance in full by the statement due date, you only pay what you charged and you avoid all interest charges. Now, you might have an annual fee on a card. That may be the only thing that you have to pay for certain cards. But this is the way that I recommend using cards, making charges that you can pay off in full every month. The benefit there is that you pay no interest and you're maintaining or building great credit. The time between making a credit card charge and your statement due date is called the grace period. And you typically have about 20 days in each billing cycle to float your new purchases. So let me give you an example. Let's say you order a new pair of boots online on March 1st, and your credit card bill isn't due until March 21st. That means you get to delay the payment for 20 days. That's called your grace period or your float time. As I mentioned, if you pay off your entire credit card bill, those boots are not subject to the APR. Now, let's talk about some different types of APR. Most credit cards have several different types that are going to vary depending on how you use the card and depending on the issuer. There may be an introductory APR or called a promotional APR. This is typically a lower rate that's offered for a limited period of time, so it's a promotion. It might apply to specific transactions, such as just new purchases or maybe to balance transfers only. And when the introductory period ends, the APR may adjust to a higher rate. All credit cards have a purchase APR. This is the rate applied when you make a new purchase on the card. Most have a cash advance APR. This is the rate for using a card to withdraw cash from a bank or an ATM. It's typically much higher than other APR types, and it does not come with a payment grace period. So I don't recommend using your credit card for cash advances. A lot of cards also come with a balance transfer APR. This is the rate applied when you move an existing debt balance on another credit card to this card. So transferring debts from another card or maybe even from a loan to a lower rate balance transfer credit card can be an excellent strategy to eliminate debt faster. In some cases, you may even get 0% interest for a period of time. It could be 6 months, maybe 18 months. And after that promotion ends, the rate will go back up. Another type of APR is a penalty APR. Hopefully you don't get familiar with this one, but this is the rate that gets applied to your card account when you violate your agreement by not making your payments on time. After being delinquent for 60 days, the card issuer can charge up to 35% APR on your existing balance. However, this rate must be removed after you pay on time for 6 months. So again, if you've got a situation where you did make a couple of late payments, you have a penalty APR applied, it could be a huge APR. So the trick is going to be keeping up on-time payments and then watching for your rate to go back down. You do not want to continue with a penalty APR because that's going to mean paying huge amounts of interest. A common question is, what happens when I make credit card payments? If I've got multiple APRs, how does it get applied? Well, fortunately, it gets applied to your balances in order of highest to lowest APR. So let's say you do have a cash advance APR and you've also got a new purchase APR. If you make a payment, it's going to go toward that cash advance balance first because it's going to be much higher than your regular purchase APR. So that's going to help you get rid of the most expensive debt first. And if you're wondering what APRs you have on your cards, the complete information must be disclosed in your card agreement and on the issuer's website. So it should be pretty easy to find. Now, let's talk about the difference between APR and interest rate. While these two terms are often used interchangeably, they're not the same thing. They both tell you how much you pay for borrowed money, but APR includes additional fees that you may be required to pay up front. Now, with a credit card, you typically don't have any additional charges, maybe other than an annual fee that may come with some rewards cards. But the APR for a credit card is typically the same as its interest rate. However, with other types of credit accounts, such as a mortgage or an auto loan, lenders may charge a variety of upfront fees. These might include an origination fee, which is just kind of like a service fee. They could include discount points and certain closing costs. So the APR on a mortgage or an auto loan allows you to make an apples-to-apples shopping comparison. Now, the monthly loan payment is based only on how much you borrow and the interest rate that's applied, not on the APR. The APR includes those upfront fees that you're going to get out of the way before those monthly payments start. Also note that not every required loan fee must get included in an APR. So if you're buying a home, for instance, the cost of your credit report or a home appraisal may not be included in the APR. So when you're comparing loans, especially mortgages, make sure you understand what fees are and are not included in the APR. And when you're shopping, the APR that you're charged for a credit card, a mortgage, or a personal loan is primarily based on your credit rating and your income. When you have good credit scores and good income history, you will qualify for the lowest, most competitive rates. But rates definitely vary from lender to lender, so it's always wise to shop around and compare at least 3 quotes. According to Bankrate.com, some of the best credit cards for 2020 are charging in the range of 13% to 25% APR. They tend to have a variable APR, which means that the rate is tied to a financial index, such as the prime rate. So when the index moves up or down, so does your card's variable APR. Fixed rate cards are fine, but variable rate just tends to be a little bit more common. Remember that when it comes to credit cards, the APR, it's just one way to evaluate a card. You also want to consider how you plan to use the card. Any rewards that come with it, such as retail discounts, travel points, and cash back. That could make the card a lot more valuable to you depending on how you're going to use it. Rewards cards and retail cards often charge the highest APRs though. So as we've covered, if you are not paying those off, if you're letting the balance roll over from month to month, it may not be worth it. That extra interest that you're paying could definitely wipe out the value of the rewards that you're getting. But if you're disciplined about never charging more than you can pay off in full each month, a card's APR is irrelevant because you will never be charged any interest. So those high-interest rewards credit cards make a lot more sense when you are disciplined about paying off the balance in full each month. But if you're not and you're carrying a balance, you always want to choose a card with the lowest APR. And for other credit accounts, such as mortgages, auto loans, and personal loans, the APR is typically much lower than for credit cards. With mortgages and auto loans, these are typically secured loans, so they offer the lowest rates out there. Personal loans may also be pretty competitive, just depending on your credit situation and the lender. So always make sure that you're comparing rates for similar financial products when you're shopping for a loan. Right now, the going rate for a 30-year fixed-rate mortgage is 3.78% APR. That's just incredibly low. And if you wanted to pay less, you could get it down to 3.28% APR on a 15-year fixed-rate jumbo mortgage. For a personal loan, borrowers with the best credit may pay about 5.95% APR right now, but those with poor credit could be charged up to 35.99% APR. So there's definitely a big swing in the rates for personal loans and auto loans. That really does depend on your credit. Being aware of the APR that you're paying on debt is so crucial because it really tells you how to prioritize it in the big picture of your financial life. So if you're not familiar with the APR that you're paying right now on your credit cards, your mortgage, your auto loan, personal loan, student loan, any type of debt that you've got, get familiar with it. I really recommend that you even make a spreadsheet listing out every loan that you've got, the current balance, the APR, so that you can understand which loans you should be attacking in what order. It's typically a good idea to get rid of debt in order of the highest to lowest interest rate. That is going to allow you to eliminate the biggest interest expense in your budget. Then you can use that money to continue paying down the next highest interest rate balance as quickly as possible. So I hope this helps you understand APR and, the really significant role that it plays in your financial life. If you are struggling with high APR credit cards right now or high APR loans, it's likely because your credit is not as good as it could be. So if you're trying to get approved for a credit account, but you can't, or maybe you've been trying to rebuild credit after going through a financial hardship or a divorce, or you're struggling with anything related to credit, I would definitely love to help you. I created an online class that goes deep into credit education and strategies, and it's self-paced because it's online. You also get lifetime access to all the videos and exercises, so I would definitely recommend checking that out if credit is a challenge for you. All you have to do is send me a text message. Text the phrase credit course with no space to the number 33444, or you can visit lauradadams.com to learn more. That's all for now. I'll talk to you next week. Until then, here's to living a richer life. Money Girl is produced by the audio wizard Steve Rickyberg with editorial support from Karen Hertzberg. If you've been enjoying the podcast, please rate and review it on Apple Podcasts. New episodes are released every Wednesday, and when you're subscribed, they automatically show up in your podcast app. Be sure to hit the subscribe button in the Apple Podcast app or wherever you listen. You might also like the backlist episodes and show notes that are always available at quickanddirtytips.com.